This is Siddharth Alwalia. Welcome to the 100x Entrepreneur Podcast. This episode is brought to you by Prime Venture Partners, an early stage VC fund led by Amit Somani, Shripati Acharya, and Sanjay Swami. Prime is often the first institutional investor in category creating tech startups in fintech, SaaS, healthcare, and education, such as MyGate, Quizzes, MFine. To know more about Prime, visit primevp.in. Today, I have with me Sheel Mohnot, founder of Better Tomorrow Ventures. Sheel has been an entrepreneur two times, and both his journeys, he saw a successful exit via acquisition. With Better Tomorrow Ventures, Sheel typically invests at seed and pre-seed stage, riding between 500,000 to 1.5 million check. Welcome, Sheel, to the 100x Entrepreneur Podcast.
Thank you for having me, Siddharth.
Sheel, we'd love to know about your journey as a founder and then as a VC.
Yeah, absolutely. So, my journey as a founder, I guess, even before I was a founder, it starts. Let's talk about my journey in fintech, financial technology. It starts out on the nonprofit side. I actually spent some time working on the nonprofit side with this nonprofit called Kiva. Kiva is a website that allows individuals from the developed world to make loans to individuals in the developing world for the sake of alleviating poverty. And I actually moved to India to work on this project. And through the course of Kiva, we've done several $billion of loans, all at 0% interest. But this, although it's a nonprofit, we really operated like a startup, and we had a lot of really influential people guiding us. We had Reid Hoffman on our board. We had Keith Rabois involved very early on. So this is my first foray into fintech, and ended up being a foray into startups as well. And so I really enjoyed that. But before and after that, I was in consulting. I worked at BCG, serving financial institutions. And then another buddy of mine from BCG had an idea for a company, and we left and started this company called FeeFighters. FeeFighters was a payments company that was a reverse auction for credit card processing. We started it in 2009 and raised a seed round, 1.6 million bucks at that time, and then ran it for a couple of years. Had a acquisition offer from Groupon, which at the time was growing pretty fast and wanted to expand into payments. And so we got acquired then in a couple of years, and ran our group within Groupon for a little while. At that point, I had an idea for another company that's an auction company called Innovative Auctions, and me and some friends started this company that we bootstrapped. We didn't raise any money for it, and it got acquired in 2015. After that acquisition, I ended up becoming an investor full time. I found that I'd done some investing after the first exit in 2012, and really enjoyed it. I just love working with entrepreneurs at the earliest stages, and I thought, let me double down on this and make this my career. So in 2016, I started working with 500 startups, originally as a mentor, and then started a fintech focused cohort within 500, and then originally was putting my own capital up in these companies, and then raised a fund around it within 500. Had some success with that fund, and then late last year set up this new fund that's a $60 million fund focused on pre-seed and seed stage fintech. And the fund is called Better Tomorrow Ventures. And in this fund, I've got a partner. It's just two of us, Jake and myself. And Jake also is a fintech founder. He co-founded a company called NerdWallet. It's pretty successful here in the States.
Fantastic. And Sheel, you started a podcast which was acquired by Gimlet. Can you share more details on that? Would
Yeah,
love to hear your journey on that side.
yeah, absolutely. So there's a show here called Shark Tank. Are you familiar with it?
Yes, absolutely.
So this is in the beginning of 2015. I was watching Shark Tank. I thought it was a fun show to watch, but very unrealistic. What they depict is not the reality of venture capital. And the majority of the companies that get funded on the show don't actually get funded, all sorts of issues. So I was watching that and I thought, I wonder if it'll be interesting for people to listen to me as I take pitches. And this time I was just an angel investor. So I started recording some pitches and then we evolved the show over time.
Yeah,
Started in 2015, and actually in 2017, the beginning of 2017, we got acquired by a company called Gimlet Media. That's a podcasting company that got acquired by Spotify, and so we shifted everything. It became a much more professional show. There's now a 5-person staff dedicated to the show. And I'm still on it, although not on every episode. They record in New York, and I live in San Francisco. But it was a cool thing to go through. An acquisition for a podcast is unusual.
and you mentioned that that show had $1 million in ad revenue. This was before the acquisition or after the acquisition?
After the acquisition, I think before the acquisition, we were doing something like maybe not quite a couple 100,000 in ad revenue, but something in that 150 to 200K.
But podcasts have really taken off, like as an industry, very recently, and you have been doing it from very early. So, do you believe that there is a potential for independent podcast creators rather than a platform?
I think so. I think that advertising is tough in
Yeah,
podcasting. Like we made it work for us, but it was not easy. And you know, we had a lot of listeners, and despite
yeah,
that, we only got, didn't make that much money.
yeah.
Um, so I think there's a real opportunity to have paid podcasting and subscriber based podcasting. I think will do really well, and I'm surprised that that market has not been cracked yet.
Yeah. And Sheel, so this counts your as a third exit.
Yeah, yeah, that's right. Although I it wasn't a big exit, not really a tech company, more of a media thing. But yes, that's correct.
Yeah, yeah. And Sheel, you have been an investor from 2012 in some of the billion-dollar companies today, like Coinbase has been one of your, uh, you know, uh, initial investments, and there are some others, right? What kind of, what were you looking at very early stage? Because majorly other was Instacart, right? So you have an inclination towards fintech. What's that inclination, and how do you spot very early, companies in fintech that you believe are going to become tomorrow billion-dollar companies?
I think primarily at the stage that I invest, which is pre-seed and seed, what I look for more than anything else is the founder's vision. Do I believe that this founder is going to be able to execute on their vision and be relentless in that pursuit? And that's the number one thing. Beyond that, everything else changes. But what I'm investing in is a founder and or a set of founders, and that's really what I look for. And everything changes. Famously, actually, um, Amazon.com, one of the names uh, that Jeff Bezos was going to call the company was Relentless.
Yeah.
And even today, uh, if you go to relentless.com, it actually redirects to Amazon.
Yes. Yes.
Uh,
So
so
you have.
so I look for founders uh, playing in a big market, because you can be relentless in a small market and it still won't do that well. So I think ultimately you have to be able to build into a larger market. But those are the two things I count on more than anything else. And then beyond that, we look for how much traction have they achieved, are the terms right, uh, is there a technology advantage? Is there a reason that it exists now? These sorts of things.
And Sheel, can you talk about the current investments from Better Tomorrow Ventures?
Yeah, sure. So, like I said, we started this fund just late last year. It's a $60 million fund, and we have done four core investments to date, and we led each of them. The first one is called Unit. They're based in San Francisco and Tel Aviv, actually, as well, jointly HQ'd. And they help technology companies build financial services into their products and launch vertical banks to their audiences. So if you are a tech company wanting to add in banking services, you can work with Unit. It's a banking as a service company.
Got it. And what are the other companies, other three companies
Yeah,
in your
sure.
portfolio?
The second company is called Super. They're based in Mexico City, and it's a parametric insurance company that's starting in Mexico. And parametric insurance is simple. It's insurance based on parameters. What are the parameters? If X, then Y. And the first product is earthquake insurance that pays out automatically if the earthquake happens. So, if there's an earthquake of a certain magnitude within a certain radius of you, you automatically get paid a certain payout. And this is a game changer in this market, which is the insurance is not well penetrated in this market, and so they're starting with earthquake insurance because that was a good place to start a big audience. But parametric insurance can be used in many other fields, such as hurricanes can be next. Life insurance is a parametric product. They'll do many others, and also plan to move beyond Mexico. Um, the third company we invested in is called Quinn. It's a cloud-based operating system, or emergency or electronic health record for smaller hospitals. And this is a big opportunity. Typically, has been a tough sales cycle selling into hospitals, but we really like this team and what they've been able to do. And you might say this is not a fintech company, but for us, this really fits our ethos that everything is a fintech company. And a lot of these companies that are operating systems for businesses will actually be selling financial products. So in this case, it's more clear. They have a billing module, they work with insurance. So these are the fintech components. The fourth company we invested in is called Figure HR. It's a compensation platform. So they help companies figure out compensation, how to pay their employees, how much salary, how much equity. They have a system of record for salary bands and job ladders, dashboards for analytics. And this is a typically an old industry where they have manual compensation surveys, and they're bringing this all online with real-time analytics and data. And the idea is that if you bring transparency to compensation, it'll make things a lot more fair.
So, Sheel, you said in one of your interviews that you were making software for hospitals and you hated it. What was that
Yeah,
time, and what made you then invest in a hospital software company?
yeah, it's a great question. So, yeah, this is a long time ago. So it was 2002 to 2004. I worked at a company called Cerner. It's now a pretty successful public company. Um, it's actually since the time that I was there, the company has 10 to 15x the stock price, and it's now a 20+ billion-dollar company. Um, and they make software for large hospitals, and they're used at many hospitals around the world, including the largest hospitals. Um, it was a tough business for me to be in because I didn't like certain things about the sales cycle and the product, and the control I had over what I was building was minimal. Um, what I'm excited about in Quinn is they're building it all with the right end customer in mind. And I think they're going to build a really phenomenal product. Um, and their focus on these smaller hospitals is a good one. Um, the larger hospitals all have massive customization needs, which the smaller hospitals have less.
Got it. And you said a couple of minutes ago that every company will be a fintech company. What does it mean, and why do you think is the reason for that?
Yeah, I should say we always say that everything is fintech. What we mean is many companies in the future will be fintech companies, and specifically, especially companies that are marketplaces or vertical SaaS businesses. If you have distribution and you have a data advantage, you can layer in other stuff like lending, insurance, payments. And so, because of that, we think many companies will be fintech companies in the future.
And Sheel, you spent 1 year in India. What was the idea of that year spending? And did it occur to you that you can spend more of your time in India, seeing India opportunity, or make investments in India?
Yeah, absolutely. So, yeah, I moved to India in 2006. I was working with Kiva, the nonprofit that I mentioned, and also did this fellowship in India called IndyCore. And when I lived in India, I was living on a, I was trying to live like the people that we serve are borrowers. So I was living on a salary of 2,000 rupees a month.
Wow,
And
that's nothing.
I,
That's like $40
yeah,
back.
yeah, it was a tough time. It was a tough time in my life in many ways, but very, very rewarding. I actually got very sick. I got typhoid, and I went to the free hospital. I All sorts of things that I went through were very interesting for me. But I think one of the things I realized is what makes me happy is not money. I'm not very money motivated, even though I'm in a field that is very lucrative, and success involves, if you have success, that means you make more money. Um, I realize that's not something that necessarily is what makes me happy. It was a really wonderful experience for me, and I did think about moving to India afterwards. And in fact, afterwards, I ended up working in consulting at BCG, but I came back with BCG to work in the office in India for a little bit, and even contemplated a job in India. But the timing never worked out, and for whatever reason, I didn't end up living in India again. But it has a very soft spot in my heart, and I go almost every year. In terms of investing in India, yeah, I would love to. Um, One of the things I think about a lot as I think about India and me leading pre-seed and seed rounds is it right for me to be the investor? I like to be very hands-on, and it's a little bit harder to be hands-on with a team in India. Um, and then I also think there are many great investors in India already. So am I adding enough value for it to make sense for me to be a lead investor? So these are things I think about. So I haven't led any deals in India, but for the right opportunity, I would love to.
And but you carry a very different perspective of what future of fintech could look like, because you're already living and breathing in Valley, and investing in the future of fintech in Valley. So I think that would certainly reach India at the pace India is innovating. Right? You might have heard of UPI stack in
Of
India, the
course.
Aadhaar, right? That is it's a leap from moment for India in terms of serving the a billion uh, population of India in terms of financial needs, financial products.
Yeah, it's really cool, what the government has done in India, and UPI, Aadhaar. Uh, these are all really smart things that the Indian government has pioneered for the rest of the world, and it'll be interesting to see where else these things happen. I, honestly, it's very impressive.
So you mentioned that at point in life you were in job. What were the key, if I could ask, in the last 10-15 years, key moments in your life that would say your that shifted your orbit for the positive, if you get what I mean?
Yeah, sure. I think one is simply, as I mentioned, living in India, and that 2,000 rupees a month. That was very influential to me, and I think one of the things you learn about when doing that is in India you would call it jugad.
Yeah.
Here, we'd say like scrappiness, and I think that's very important. And I think it's important in the people that I choose to work with also have a good ability to be scrappy. And that's true in my companies. And it's just, surviving. And so much of success in startups is literally just surviving and not giving up uh, through any adversity. If you just keep going, eventually, if you work hard enough and are smart enough, eventually you'll make it work. And so I try to find people that are scrappy as much as possible. So that was one uh, big point for me. And then the other was just finally doing my own thing. Like, you know, growing up with Indian parents, they always, of course, they wanted me to be a doctor, and then if not a doctor, then an engineer and have a steady job. And my parents left India in the 70s. So their impression of the world is that that success is having a consistent and steady job. And so when I was quitting my job to do a startup, it was uncertain for them. They didn't like that idea. They said, "Why don't you just do that on the side? This is not going to be You're not going to have success." Finally having some beginning inklings of success was great for me. I finally felt like, okay, I'm doing my own thing and I'm enjoying it, and this is what I'm meant to be doing. And kind of at that moment, maybe 10 years ago, I realized I'm probably never going to work for somebody else again. And, it has not happened since. And that's been wonderful.
Yeah. And how did you, since you had an early exit in 2012, just 1.5 years into the business, how did you spot your early angel investments? Because that must have been pretty tough. You need to have a lot of luck on your side being an angel.
Yeah, definitely I had a lot of luck on my side, no doubt about it. Um, what I did was, so I was living in Chicago at the time. I moved to San Francisco in 2012, and I became an angel investor for a few reasons. One, uh, meet people, make friends. I figured I could, meet interesting people that are trying to change the world, and some of these would become my friends, and that worked out a little bit. I figured I could be inspired by these people and think about businesses that I want to start, or maybe I would join them in their pursuits. And then I thought, final thing, I thought maybe I'll make money if I'm good at it. And I naively thought of myself as being good at it at that time. Of course, I had a lot to learn. And early on, I did, by dumb luck, have some successful companies. Um, but it was an easier time to be an investor in 2012. There were a lot fewer investors. Um, you could literally just show up at YC demo day, invest in a few companies, and have a good chance of success. There's nothing like that today. Like, you know, at the time, the YC demo days were 1/10 the size of that they are today, and the quality was higher. Um, and nothing like it anymore. It's gotten to be a much more difficult business to be in, the business of venture. Uh, and I think returns will show that. You know, being a seed investor those years, so when I started investing 2012, you think about those vintage years from a fund perspective, that's 2010, 11, 12. Um, those are the best years of venture. Um, and it'll be tough to replicate going forward.
And why do you
So
say that? Those were the best years of venture.
yeah, there was not yet enough capital in the system, and there were very many good ideas. So right now there are many good ideas, but also many other people doing the same idea. There's a lot of competition, and that costs money. And at that time, there also were not that many investors, so valuations were much lower. Um, these days in the states, a seed round is somewhere between. uh, Now I'm seeing really crazy stuff. I would say seed round valuation is somewhere between $10 and $20 million. It's insane. And pre-seed, you could call it 5 to 10. Um, at that time, uh, we were investing in companies that had 1.5, 2, 3, $4 million valuations, and so if you think about the outcome required, it's much higher than it was then.
And the Y Combinator check has remained same. Just the number of companies has grown from 20 a batch to 280 a batch.
Yeah, actually, at that time, no, actually, at that time, the YC deal was only 15,000
Okay,
for I think it was 6%.
767%, and today's
It might have been
120.
seven. Yeah, it might have been seven.
Yeah, 125,000 for 7%.
Yeah, but at that time it was lower,
Okay,
and at that time they actually gave you a little bit more money if you had more co-founders, I believe. So it
okay.
was something like 15 to 18,000, but a minimal amount of money.
But must have been easy to select from a batch of 20. And today you have a batch of 280 companies to select from.
It's hard to even look at all the companies. Look, I only invest in fintech now. Even for me,
Yeah,
it's hard to meet all the 20 plus companies in fintech, 20,
yeah.
20 to 30 companies. So yeah, it's a different world now.
And Sheel, what are the key lessons that you have learned during your last 7 years of venture investing, that you can share with us?
Yeah, number one, I think it's all about people. This is a
Yeah,
people business at the seed stage. Beyond seed, things change, and you have numbers.
yeah,
The place that I play more than anything else is a people business,
yeah.
and invest in people with high integrity that you want to work with, that will never give up. And that's all. If you do that, you'll have success.
Okay. And you say that and what are the key things you look for because a fintech entrepreneur must have some experience of financial technologies or working in a bank. So what are the key things that you look for before you, because you are investing in people? So from
Yeah,
the on.
yeah, it's a good question. So it's funny you say that, because I don't think I've invested in anybody who came from a bank, was working in a bank.
Okay.
Like, I think all of my founders have come from the technology side, not from the bank side.
Yeah.
But they need to understand how financial technology works, and that can be done. It doesn't have to be from uh, working in a bank. It can be just from understanding, reading, talking to people. They need to have an understanding of the market, and they need to have an understanding of all competitors and how they're going to get into the market and win. But they don't necessarily need to have worked at a bank. And in fact, it's probably generally seen as a negative signal if they have worked at a bank. Not always, but many times.
Because you would be thinking backwards if you're working in a bank and entrepreneurs have to invest in the future. What can the possibility be?
Yeah, exactly.
Thank you so much, Sheil. It was wonderful to have you on the podcast. Thank you for taking time out. It was a real pleasure listening your wisdom and experience.
Yeah, absolutely. Wonderful chatting. Enjoyed it.